Michael, Neil, good morning. Starting with your results, Ryanair's Q1 PAT more than doubled to 820 million. What were the key drivers?
Yeah, well, we saw traffic increase by 4% to just under 58 million passengers. This was driven with fare recovery, 21% increase in fares, although we did benefit very much from having a full Easter in April of this year. As you recall, there were weak prior year comps, and then there was modestly stronger than we would have anticipated close-in bookings, particularly in May and June. On the other revenue line, ancillaries, we saw another solid performance from our ancillary revenue, increased by 7% to 1.39 billion, or on a per passenger basis, a 3% increase to just over 24 euro. Cost put in a strong performance, rising just 1% on a per passenger basis, as we saw the benefits of our strong fuel hedging offset a 16% increase in ATC route charges and rising environmental costs. So we're seeing the likes of the SAF blend mandates coming in this year, free ETS allowances starting to roll off. But, you know, overall, a good performance in the quarter.
Ryanair enjoys competitive fuel hedging. What's your current position?
Yeah, so we're for the remainder FY26, we're 85% hedged at $76 a barrel. That's a 4% saving on our hedge price in the prior year. And already for FY27, we're 36% hedged at $66 a barrel, a 13% saving on our FY26 hedge rate. So we're in a strong position both to make significant fuel cost savings, but also to eliminate the kind of volatility we saw and have suffered in recent months.
You mentioned environmental costs are increasing. How much are they this year?
Yeah, it's a big number. It was 850 million euro last year included in our fuel cost, just over €4 per passenger. This year, with the SAF blend mandates coming in, with the ETS free allowances rolling off, that's going to increase to over €5, €5.30 per passenger, or about 1.1 billion. Significant number, as I said. And you know, I think it's remarkable that none of this gets recycled back into environmental projects across Europe. We don't see any of it going back into the production of SAF. We don't see it going into latest technology aircraft. So I think if Europe are really serious about competitiveness, it's timely that they take a hard look at this and abolish these penal taxes, because they're not delivering from an environmental perspective.
Turning to the balance sheet, Ryanair's industry-leading balance sheet is BBB plus rated. What are the key call-outs?
I think the obvious one is the 600 Boeing 737 fleet, which is entirely unencumbered. We have strong liquidity. We're currently at the quarter end sitting on about 4.4 billion of gross cash, just over 2 billion of net cash. But we need those funds as we have two very large bond repayments coming at us in the next 10 months. An 850 million bond in September and a 1.2 billion bond next May. But that puts us in a strong position to pay down our debts and hopefully by the middle of next year be entirely debt-free, with a large fleet of aircraft completely unencumbered. And I think that maximises or increases the financial flexibility, which also materially widens the cost gap between us and our competitors in Europe, most of whom are heavily indebted either through bond and or aircraft leasing, and they're exposed to expensive financing and aircraft leasing costs at a time when we own our aircraft, and the only cost we suffer on those is depreciation.
What is FY26 COPEX guidance?
I think we'll be close to about 2.2 billion. Now, that reflects the 30 spare CFM LEAP engines that we announced back in July. It doesn't include any CapEx that may or may not be needed in relation to the engine shops that we're looking at developing towards the back end of the decade. So there may or may not be some CapEx in relation to tooling and spare parts this year. And of course, it's heavily dependent on Boeing delivering the aircraft when they say they will, although we'd have a high level of confidence that we'll get them all ahead of the summer next year.
Moving on to shareholder returns, can you please update on the current share buyback?
Yeah, as you know, we launched a 750 million buyback programme in May. We're very early into that programme, but during Q1 we bought and cancelled about 2.8 million shares at a cost of about 60 million euros. We're happy with the broker's progress on the latest buyback, particularly given the MSCI indexation and lower market volumes.
When is the next ordinary dividend?
Well, we've declared a final dividend of 22.7 euro cents, and as always the case, this is subject to AGM approval in September. So as soon as it's approved, it'll be paid fairly quickly after that.
Shifting to fleet and growth, what's the latest update on the MAX 8 game changer deliveries?
Yeah, so we took 5 additional game changers in quarter one. Currently, we have 181 game changers in the fleet. We're 29 aircraft short. We will take all of those deliveries this winter. well in advance of summer of 2026. And I think the fact that Boeing have in recent months been hitting their rate 38 will enable them to go to the FAA and get clearance to increase to rate 42. Leaves us much more confident that we will complete this winter the entire 210 game changer order, and puts us in good shape then, we think, for the MAX 10 deliveries as well in the spring of 27.
Is there any update on the MAX 10 certification?
Well, Boeing are still indicating that they expect the 7 and the 10 to be certified towards the back end of 2025, with a slight risk that it might slip into early 2026. But we've received confirmation from them recently that they're working very much on the basis that they'll be delivering our first 15 MAX 10s as per contract in spring 2027.
What's the latest on aviation tariffs?
Like most industries, there's still no real clarity. The US, however, has postponed the tariff implementation from the 9th of July to the 1st of August. We believe from publicly available sources that there's progress being made on the EU-US tariff negotiations. However, there is cautious optimism that commercial aircraft and aircraft leasing will be exempted from tariffs, primarily because the US is such a big exporter of aircraft, engines and spare parts. However, in our agreements with Boeing, the purchase price is agreed. It's a fixed purchase price, and therefore tariffs will not be a problem for us. But we will work with Boeing to minimise any tariff impact on our aircraft deliveries. But we would hope that commercial aircraft will be exempt from the next round of tariffs, as they have been for many years since the 1979 tariff exemption agreement.
What are your views on European short-haul capacity?
I'd expect European capacity to be constrained for at least the next 5 years to 2030. We see the two big OEMs, Boeing and Airbus, still behind on their production targets. Order books are full out to probably the middle of the 2030s. Then we've got the Pratt & Whitney engine issue continues to rumble on. And M&A is kicking off again in Europe. Recently we had Air France saying they're going to bring their stake in SAS up to 60%. The new government in Portugal are now going to put TAP up for sale in the coming weeks. Air Europa is getting more mention. So I see capacity usually constrained for some time to come.
Where are you allocating your constrained 3% growth this year?
To those countries and regions in Europe who are abolishing environmental taxes, Sweden, Hungary, regional Italy, where we've announced new bases this year, and also to those airports who, like-minded with Ryanair, are stimulating growth. And again, I point to the fact that we announced a doubling of our Warsaw. We plan to treble our Warsaw model and traffic over the next 5 years, rising from 1.5 to 5 million passengers on the back of a long-term multi-year growth agreement. And we expect that trend will continue. There will continue to be new base growth in Sicily, Poland, Modlin, in Hungary and in Sweden. And we're also expect to be announcing more new bases and new routes this winter as we take delivery of 29 aircraft for summer 2026.
Moving on to ownership and control and ESG. Ryanair joined MSCI World Index in June. Is there any update on FTSE Russell?
Well, firstly, I think I have to say we very much welcome Ryanair's full inclusion in the MSCI World Index. This has been a positive development for our shareholders. Looking at the criteria for FTSE Russell, we would expect to be included in their index when they do their next calibration in September, although they have flagged that any inclusion will be on a phased basis, probably over a 2-year period. But still, if it happens, another positive development.
What are Ryanair's Q1 ESG highlights?
Well, I suppose it's taking delivery of 5 new game-changer aircraft, 4% more seats, burn 16% less fuel, and 20% less CO2 emissions. We also continue to benefit from the winglet retrofit on the NG fleet. These winglets deliver 1.5% fuel efficiency and a 6% reduction in noise. And I think the fact that we bought 30 new spare fuel-efficient CFM LEAP 1B engines at a reasonable discount shows our continuing commitment to buying new technology that will lower our carbon consumption, lower our emissions, and we expect that trend will continue. Although, as Neil has said, we and the other airlines, other European airlines, are now campaigning vocally for a reform of Europe's failed environmental tax regime. It is indefensible that European citizens and European airlines are the only ones paying environmental taxes. And the way to deliver that level playing field is to move ETS tax rates into line with CORSIA, which is what the long-haul non-European airlines pay. And we'll continue to demand that move to CORSIA rates ASAP. If Ursula von der Leyen again is serious about delivering competitiveness in Europe, as the Draghi report has pointed to, we need a level playing field in the case of environmental taxes for air travel in Europe.
Can you give more detail on the LEAP engine deal?
Yeah, it's a big deal. It's a $500 million investment at list price, although as Michael said, that there is a reasonable discount in there. So that'll see our pool of spare engines increase to 120, which is a massive investment by Ryanair in our operational resilience. Importantly, these LEAP engines will be able to be used on not only our game changer aircraft, but on the MAX 10s when they come into the fleet. And they'll deliver over the next 2 years. In fact, we've already taken some of them this year, this summer, which helps underpin our 2025 summer operational resilience as well.
And lastly, on outlook, what's the group's FY26 outlook?
Well, as we've said, we expect traffic growth will be constrained by only 3% this year to 206 million passengers. Q2 demand, that is the September quarter, is robust. We now expect fares will recover most of the prior year 7% Q2 fare decline. However, the final outturn for H1 is heavily dependent on the strength of close-in bookings for the remainder of August and September. Nevertheless, we now cautiously expect to recover almost all of last year's 7% fare decline in the full year. As previously guided, we see modest unit cost inflation up 1 or 2% this year, as our very strong fuel hedges are offsetting runaway ATC cost increases and rising environmental taxes. It's still too early to provide a meaningful guide for full year profit after tax guidance, as we've zero H2 visibility and much tougher prior year comps in the second half of the year. But I think it's reasonable to expect FY26 profit growth, reasonable profit growth with fare recovery and strong cost control. The final outcome will, however, continue to be subject to shocks, tariff wars, conflicts, and recurring and unacceptable ATC strikes. We had 2 ATC strikes French ATC strikes on the 3rd and 4th of June. We were forced to cancel 500 flights over those 2 days, cancelling the flights of nearly 100,000 passengers. About 90% of those flights would have continued to operate if Ursula von der Leyen and the European Commission had simply protected overflights over France. And it is simply unacceptable that the Commission continued to sit on its hand, allowing the single market to be shut down by a tiny number of French air traffic controllers. But we live in hope of seeing some reform and some move towards competitiveness within the EU Commission. Thank you for that. And Neil, thank you very much. Jamie, thank you for the questions. And we look forward to talking to you on the conference call, which will be held later on this morning at 10 o'clock.